Hi, everyone. Welcome back to Wall Street Silver. Our guest today is Garrett Goggin. He is the editor of Stansberry Research, silver stock analyst. Garrett, welcome back, sir.
Hey, Ivan, Jim. Thanks. Nice to see you guys. Happy to be back.
Hey, so Garrett, the big talk right now. Yeah, I know you're a silver analyst, but you're also a big picture macro guy.
Mm.
And the big, the Fed is currently in its tightening cycle. Everyone's wondering, all right, how much more can the Fed tighten before the market just caves, or the housing market gives up, or or new home starts just fall off a cliff.
Yeah.
We've already seen refis are going through the floor right now. They're down by 2/3. Is there a pivot point where you think the Fed has to stop worrying about inflation and go back to easy money?
Yeah, when the market sells off, that's what's happened every single time. They raise rates and they tighten until the market sells off. And then when the market declines about 20%, everyone's freaking out, about their 401k statements. Then the Fed is forced to back off, go back to an easing policy. You look at Federal Reserve balance sheet, it's still at about $9 trillion. They keep talking about cutting back on it. They haven't been able to cut back at all. Over the upcoming months, if they do cut back, the yields are even going to go higher than what they are. The economy is going to fall on its face because it's, over leveraged, powered by debt, and nobody can afford higher rates. Not even the U.S. government can afford higher rates. So, to be honest with you, that's what I think. The Fed is going to tighten until the market tells them that they got to stop, which is not that far away. And then when they come back in and provide all the stimulus again and show everyone that they're powerless to fight inflation, silver and gold are going to go off to the moon.
Yeah, a lot of people think that pivot back to easy money is when silver and gold really launch.
Yeah.
One of the things with the Fed, the Fed in the past couple of years has been the biggest buyer of U.S. government treasury debt. So not only are they no longer going to be, we still have $3 trillion deficits. I mean, well over two huge deficits in the United States. So not only are they not going to be buying those deficits to subsidize the government, they're talking about reducing the balance sheet aggressively, using words like aggressively selling off their balance sheet.
Yeah. There's no way that can happen. You know what else is happening right now with the whole Ukraine-Russian fiasco? We kicked Russia out of the Swift system, and Russia now wants payments for their natural gas. They don't want it in dollars anymore. They want it in rubles, they want it in gold, they want it in Bitcoin, just anything other than dollars. China's jumping aboard, the UAE's jumping aboard. The whole petro-dollar-based system over the past 100 years is in decline, and people are opting out left and right. So it's just a matter of time before we see that weakness in our bond market, because the foreigners aren't buying the bonds either, and yields go higher. The Fed's the only one that's going to be buying these things in the end, and that's when inflation is going to go crazy. It already has gone crazy. We talked about meat prices and all that, but I don't think we've seen anything yet.
That's a good point you just brought up about weaponizing Swift, the way we've weaponized the US dollar. We've basically made, for Russia, we've basically made the dollar and the euro pretty much useless, worthless to them. So why would they accept dollars and euros in exchange for hard commodities going forward, right?
And it's about Zoltan Posner. He's a brilliant banking analyst.
I read that, yeah.
Yeah, the guts of the system. The inner workings, and he talks about inside money versus outside money. And inside money is the Federal Reserve System. It's Swift, it's the banking system, it's treasuries, it's all that. Versus outside. Oh, and also if you're in the inside system, your money can get canceled at any moment. Oh, Russia, we don't like what you did. There goes your Forex balance of $900 billion. You don't have it anymore. The Canadian truckers, right? They were all protesting. The Canadian government came in. They said, oh, well, all right, you're going to lose your bank accounts and you lose your insurance, you lose all that. That's all inside money. That's all controlled. And that's tied into the central bank digital currencies, which will never work for that reason, because the beauty of gold and silver and crypto is because it's outside money. You own it, no one else can touch it. So the actions that the U.S. has taken against Russia, it's forcing big money to go in to like an outside system, such as gold and silver and crypto.
One of the points that we've introduced by what we've done with Russia, and I'm not defending Russia, what they're doing in Ukraine or anything, but what I am talking about is we've introduced something that never existed before with the dollar and the euro. counterparty risk that you're just going to lose it all.
Yep.
It's never really been a risk before that all your dollars are just going to disappear.
Yep.
And now that's a real reality for the dollar and the euro, the way we've weaponized this like never before against not just some rinky-dink country. We did it to freaking Russia, who's got the second largest batch of nuclear weapons on the planet.
Yeah.
I mean,
and a lot of oil.
Yeah. If you got to think, if China's aiming for Taiwan one of these days.
Right.
You think China's not watching this and thinking,
Exactly.
do we really want that much exposure of $1 trillion worth of treasuries in the United States right now?
Exactly. So if this is what happens, if you piss off the United States, then yeah, what's going to happen when we go after Taiwan? Yeah. And, foreign holdings of U.S. treasuries has gone down over the past, 5 years, and it's going to continue going down further. One thing regarding outside money is, I've got a colleague that at Stansberry Research that lived in the Ukraine, and he was forced to flee. And the money to get out of the ATM, it was limited. You only get, I don't know, $50 a day. I don't even know what the Ukrainian currency is, but you only get $50 worth of it. And he had gold and silver and Bitcoin. And, that's why he was able to get across the border. He was able to convert Bitcoin to his, actually was going to Poland in the Polish currency. And he was able to convert gold and silver into the Polish currency. That stuff still worked. That was, outside money. The inside money was gone. So, that got him through.
That's a lot of people in the silver stacking community. They're not stacking silver just for a trade of 25 to 35. No one's, I don't think anyone's doing that who I know in Wall Street Silver. Most of these people are planning for
long game.
It's your insurance policy for if the shit really hits the fan, right?
I got no problems with stacking. I think it's a great idea. Just convert your US dollars, because the value of it is going to be going down, which we've seen through food prices and inflation, and it's going to pick up and it's going to get worse. And you want to own assets with a fixed quantity that have been stores of value for hundreds of years, including gold and silver, and crypto has been a good store of value.
Something else, you're known as a stock analyst, a silver analyst for Stansberry, and we all talk about what our favorite stocks are, but there's something that I've seen you write about on Twitter numerous times, is which ones to actually avoid, the actual dogs, and why you avoid them, right? And I think almost this is more important than talking about your favorite stock. Is talking about what are the dog stocks that must be avoided, and for what reason?
All right, it's pretty simple. Like, you start a business, right? You put capital in it. Say you put 100 mil capital in it. You want to get more than that out. You want to get 200 mil, 300 mil, 400 mil, 500 mil. That difference between that 100 mil you invested in, that 400, 500, that's your shareholders' equity. That's what drives profits. That's what drives a share price. Whereas you get a lot of these smaller miners that are like leaky buckets. They don't generate any revenue. They don't generate any profits. All they do is they spend money year after year after year on exploration, and of course their salaries. Now, one of the things that I look at, and actually I was just on a trip in Bolivia. I visited Silver Sands, New Pacific Silver Sands in Bolivia. Bolivia is a great country, but I was with Dr. Peter Magad, who's one of the top geologists in the silver sector. If you're a professional and you're involved with silver, you know Peter, because he is the king of carbonate replacement deposits, the CRD deposits that have huge high grade deposits of silver and lead and zinc and gold. And he found mag silver. He found a mag silver, and he found it. He had a hypothesis, and he tested it right near in Fresnil, Mexico. And he intersected Juanicipio on his first drill hole. That thing's a 1 billion ounce reserve. And we were talking about profitability and miners and what you really need. And the number one thing that you need in order to be a profitable miner is grade. Because what happens is as the price of silver goes up, these high grade operators make incrementally much more money than these lower grade dealers out there. And then the other thing too is people in the industry. You got to find the value creators and stay away from the value destroyers. And it takes a lot of time, to get to know who's who in the industry. But, I've been doing it, 10 years, and I've gotten to know, which guys add value, which guys don't. A lot of these exploration companies and production companies, their executives don't own any shares at all. They don't care about the share price. They don't care about shareholders. I honestly, I don't know why this isn't criminal. It's just, there should be shareholder lawsuits all over the place. You need to find companies where the management owns a lot of shares in their business, so they profit along with shareholders through dividends and appreciation of the stock.
Well, so what are some of the ones you've been naming online? So that you've already revealed some names that you don't really have any respect for. Do you mind naming them on video here?
Yeah, I don't care. You know, take a look at core mining, CDE. When people think silver, everyone's like, oh, core mining, yeah, silver. Well, first of all, you know, it's not all silver. They have, let me take a look. Yeah, it's silver and gold, 27% silver and gold. That stock, core mining, back in 1995 was at around $300 per share split adjusted. Now it's at $3. It's down 99%. Why? Because they dilute shareholders, they overpay for acquisitions, and they never generate any shareholder value.
Wow.
It's like a triple leverage ETF just suffering from beta decay. When you buy some of these larger mining companies, when they were doing acquisitions, all they cared about is adding gold ounces production and silver ounces production to the bottom line, because they can say, hey, our production grew from 10 million silver ounces to 20 million silver ounces. But it's like, yeah, what'd you pay for it? They overpaid on them all. And the difference between what they paid and what they got back, that's that loss of shareholder value that they continue to do over and over and over again. You get a company like Arcana Silver. Arcana was pushing the Shafter deposit 6 years ago, and that thing was abysmal. Shafter's always been hard. No one's been able to make it work. They've claimed that they were going to get it work, and they did secondary after secondary after secondary, and they failed. The company restructured, basically went bankrupt. Now they're doing the same thing again at their RV mine in Colorado. They've already done a couple secondaries. They said they were going to be in production last year. They're not. They said they're going to be in production this year. Maybe they will be, but they need more money because they already ran out of money. And what happens is shareholders get diluted. The stock price goes down. And what they do along the way is the share price goes down, they do reverse splits. So it'll go from 20 cents back up to $2 and 20 cents back up to $2. And they change their name and they put a new symbol in. And there's a lot of them. There's a lot of companies out there like that you got to watch out for.
Wow. Yeah. There's a lot of shady stuff going on out there.
Yeah. But you know what? There's a lot of good companies. There's a lot of good people in the industry.
Right.
You need to find them. You need to follow them. One company, Silvercore, it's run by Ray Fang, right? He's a Chinese guy. You know, there's a lot of conflict regarding Chinese stocks. And it was like, oh, they're all frauds. They should all be delisted. And Silvercore fell under that brush too. But, you know, I'm a finance guy. I measure the numbers. I go through the balance sheet. I go through the financial statement and the profit and loss. And then what I've seen is they've had a stable share count for like over 10 years. No other silver company has a stable share count. They paid a dividend every single year of about 2%.
They buy back shares even, right?
Yeah, and they buy back shares. That's creating shareholder value right there. You know, so shareholders have done best. Silvercore's treated their shareholders better than any other silver company that I've ever seen. That's why I went and visited New Pacific's silver sand in Bolivia, because Ray purchased silver sand for just a few $1 million a couple of years ago, and then they started drilling and they started hitting huge wide widths of 150, 200 grams a ton silver in this mountain of silver. And so that led me, so it's like Chinese, Bolivia, and then you're like, whoa, wait a minute, but you know what? I've been following Ray for a while. He's a value creator. He treats his shareholders well. So I'm okay with New Pacific, and I'm okay with Bolivia. And my trip that I just went down there was really interesting, because there's a city down there in Bolivia. It's called Potosi. And there's a huge mountain mine there. It's a mountain in the middle of the city called Cerro Rico. Cerro Rico has been mined straight through for 500 years. It's fueled the Spanish Empire. When the Spanish was the world's reserve currency, it was because of Potosi in Cerro Rico and the silver coins that they were creating there. Back in the 1500s, the largest cities in the world, it was New York, it was Paris, and Potosi. Why? Because they had a mountain of silver there. And this deposit for New Pacific Silver Sand is about 40 kilometers away from Cerro Rico. It's on the same structure. And Peter McGaw was down there, and he's looking for the high-grade CRD source of the Cerro Rico deposit that fueled the Spanish Empire for 500 years.
Another big one that another really good one that you follow is Aya Gold and Silver. That's Benoit LaSalle's company based in Morocco. What is so, I mean, I've seen their drill result. They're producing like almost 2 million ounces a year, growing up to 6 or 7 million ounces. But what stands out for you for Aya?
The huge resource, the huge high grade silver resource. I didn't know of any other silver mines or gold mines around in Morocco and the Middle East. So I was surprised to find this one, but their drill results they keep coming out with the high grade drill results, and they've done such an extraordinary job, growing the resource. And Benoit LaSalle has done a great job too, because they had like a little operation there, a few hundred tons a day. They've already ramped it up. And usually what happens when you've got a deposit like this, and it needs a lot of work, that they produce uneconomically, they lose money like the leaky bucket, and then they just got to start filling it with shareholder sales and shareholder sales. Aya's not like that. Aya makes money every single quarter, right? It's only a little bit. It's like 5 mil, 6 mil, 10 mil free cash. But you know what? That's so that the company can avoid the dilution. And then when they got to raise money, they did a raise a few months ago to basically raise a lot of the cost of the expansion. I still think they got to do a little bit more. But they did the majority of it, and they're not going to need all too many raises going forward. And they're doing it on a shareholder-friendly, profitable, accretive way. And just that area has been underexplored. And you've spoken to Benoit more than I have. In that resource, it's underexplored. They haven't looked at it in over 10 years, 20 years, if ever. They start stepping out on that resource is going to go forever. So, it's profitable now, which means it's probably going to be very profitable as they expand from like 2 million ounces to 7 million ounces. And, the stock based on, I look at free cash flow, and the average silver stock trades at about 10 times free cash flow. It looks like a good opportunity here.
I agree. I own some, so I'm just talking my book, but I agree with you.
But that's tied into, it fits my mold. It's a good operator, Benoit. It's got high grade. They're doing it accretively. They're doing it profitably, and they treat shareholders well. So why not?
Hey, Garrett, thanks so much for joining us. This is it's really a treat talking to you, because you're a very direct guy who tells it like it is. And I think that's why the audience likes you, and we appreciate you coming on.
All right, cool, Jim. Thanks, Jim. Thanks, Ivan.